Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. The most important question asked by a lot of exporters is why rupee went below 82 last week. There are two primary reasons for the same. First reason is that if you see the chart, most of the data in the US came much below their expectation, because of which dollar index came down, because of which all emerging market currencies appreciated against dollar. And the second important reason is that we have seen some amount of inflows coming from Reliance Group and Byju's to the tune of $2 to $2.5 billion. So now the big question is whether the rupee is moving towards 81 or whether the rupee is moving towards 83. We strongly believe that rupee is moving towards 83. Now let us discuss why. The reason number one is there has been increased escalation between China and Taiwan from last Saturday. If the escalation continues to increase, then it will have a negative impact on all Asian currencies, and if that happens, it will definitely have pressure on rupee. The second important factor is that interest rate differential between India and US is reducing. Now let us analyze why. India central bank said that they are not increasing the interest rate in the last monetary policy, and we are expecting that in the month of May, Fed is going to continue to increase the interest rate. If that happens, then the interest rate differential will come down, and if that happens, basically rupee will weaken. If you see the chart, that is showing the same thing, that whenever the interest rate differential is reducing, rupee gets weaker. देसी भाषा में अगर कोई बोलेगा समझाने के लिए, it means that money from India will go to US, because of which the currency will get devalued. Now let us discuss outlook for rupee. Rising geopolitical tension between China and Taiwan, then reducing interest rate differential between India and US, plus we have seen from last 2 weeks that crude oil and gold prices are increasing. It will have a negative impact on our trade deficit and current account deficit. Because of all of this reason, we are expecting that 81.50 to 81.80 will act as a very, very strong support for the pair, and in coming days the pair will gradually move towards 82.80. Once the pair breaks 83, which is the most probable outlook in coming months, then the pair is going to move much higher. Now let us discuss strategy for thin margin exporters. If the tension between China and Taiwan increases, then in couple of trading sessions the pair can move towards 82.20 to 82.50 kind of level. So for thin margin exporters, we suggest them they should keep a stop loss of 81.75 and hold for covering at the higher level of 82.20 to 82.50. At those levels they can cover 60 to 70% of their exposure. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. As discussed in the last week video, they should keep the strategy simple. So the idea number one is that they should keep the hedge ratio at the lower level. Whenever they are getting remittances, and if the pair is trading below 80 to 50, they should ideally utilize their existing forward. For further booking, they should wait for levels between 80 to 70 to 80 to 80 kind of a level. Now let us discuss strategy for importers. As the tension between China and Taiwan is increasing and the scope of appreciation is limited, plus the forward premiums are also lesser. So in that case, the ideal strategy for importer is that any dips has to be bought. Any dips between 81.80 to 82, they should ideally cover their imports for the next 45 to 60 days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.